I'm John Hornick. I'll be moderating this session. We're going to depart a little bit today from the topic of 3D printing in medicine and bioprinting and talk a little bit about investing in this space. This is a topic that I'm asked about all the time. In 2013, the stocks in this space were flying high, mostly because of two things, I believe. One is that President Obama mentioned 3D printing in his 2013 State of the Union address, and the other is that Cody Wilson 3D printed a handgun. And that got the public looking at 3D printing, and it caused, I believe that's largely what caused the stocks to get so much attention and to go through the roof. But then they crashed. And a lot of people out there think that the 3D printing industry died at that point. My mother, she says, what, is there a 3D printing industry? I never hear about it on the news anymore. But I say, no, it's growing at a great compound annual growth rate. But a lot of people don't know that. So we have four speakers today who are going to talk about looking at this industry from the perspective of investing and from the venture capital perspective. But we're going to start with David Labiak, and David is going to have a short presentation. I think everyone has a short presentation, and if you want to say anything more about yourselves, feel free to do so.
I go to a lot of these conferences, Inside 3D Printing, this one, TCT, some of the other ones, and I'm always the anomaly. Most of the people here are, from, as we've seen, Inscript, Materialize, HP, they're making the technology. And then there's others from universities and hospitals and manufacturing companies who are using the technology. I'm doing neither of those. We are trying to invest in, actually not investing in the technology, we're investing to try to make our clients money. So I'm going to give you just a little bit of background about what we do. My company is Trent Capital Management, and just a real brief introduction. We are an SEC registered investment advisor. We were founded in 1987. We really do two things. Our main focus is money management. We manage customizing portfolios for high net worth individuals. We also manage 401k plans for small to mid-sized companies. That's the majority of our business. But what I really want to focus on is that last bullet point there, the specialty private placements. That's actually how we got our start in 1987. Before I got there in 1995. But in 1987, we formed two limited partnerships, and Lawrence yesterday stole my thunder a little bit in one of the afternoon panels when he compared the telecommunications industry with the 3D printing industry, because in 1987 we actually formed two limited partnerships that were investing in a new technology, an up and coming technology, a technology that quite frankly not a lot of people have heard about, and that was cellular communications back when cell phones looked exactly like this. That particular model cost $3,200. And so we know how far that industry has come today and just the technological advances. So fast forward to 2012, we started seeing a lot of similarities in the and cellular industry from 1987 in the 3D printing industry at that time. A lot of similarities there. I'm going to keep it short. I'm not going to go into all the details. We formed and broke ground in July 2013 in a fund. It's structured as an LLC called 3D Tech Plus. It's for accredited investors only. It is SEC regulated. It also does go through an annual PCAOB audit by a certified accounting firm. And as John talked about just a minute ago, we did see certainly a bubble in these stocks very similar to the telecommunications industry back and the dot-com bubble from 2000, 2001, and the early parts of 2002. You can see some of the headlines there. I still have that Barron's magazine actually in my office, and you can see even today there is a 3D printing index, like the S&P 500 is an index, the Dow Jones is an index. There is an S&P index, and it's down sharply from 2012 and 13 were good years. 14 and 15 were very bad years. But that doesn't tell the whole story because and I'm going to talk about that a little bit more hopefully during the Q&A. That doesn't tell the whole story because those performance numbers come from a small handful of stocks that are mainly the manufacturers, the 3D Systems and the Stratasys and the Organovos of the world. If you dig a little deeper and you have a broad-based portfolio that includes some of these areas here that are very important parts of the 3D printing world and the 3D printing industry. CAD/CAM software is very important. I mean, we've heard all the speakers yesterday and so far today, talk about a lot of these areas, and they're going to be very important areas going forward in the industry and for those who are choosing to invest in the industry. That's my last slide. So like I said, just a brief introduction.
If I had to pick a country that is doing the most to promote 3D printing, it would be South Korea. In my book, I talk about this. Their goal is to have most of the population knowing how to use a 3D printer. So our next speaker, I think you have a short presentation, is John Hartner. So please join me in welcoming John.
Thank you, John. Appreciate being here. Thanks to the hosts. Also, thanks to all the other speakers and folks in the audience. It's been interesting learning from you all during sessions and after sessions as well. Digital industrialist, that name comes from really my background. I grew up on the wrong side of the tracks in Pittsburgh, so folks know that there was the prior industrial revolution, there were some remnants in Pittsburgh of steel making and railroads and coal, and I saw all that growing up. But I also saw the Carnegie Library and Phipps Park and all the things that actually came out that was good. And so when I was going to college and saw some of the things that we were talking about in the 80s, I said, I got to go to engineering and I got to go into industrial technology and change the way we make things. And that's really what I did for the last 30 years. Spent a lot of time all over the world. Automation, I thought that was the answer, and it is. It continues to be. Semiconductor capital equipment, an amazing industry. The Moore's Law and what Intel has done with equipment, and you can't always do with metal and plastic what you can do with silicon, but it's a great challenge and they drive you to it. And then solar and alternate energy, really exciting industries, and also saw some ups and downs in the marketplace. But for the last 10 years, it's been industrial digital print, a lot of that 2D, but the last 5, 3D printing. And I ran one of the companies that was one of the leaders in dental and bioprinting. That gave me the stage, and after running businesses for the last 30 years for people, I said, you know what I enjoy is finding good people and finding opportunities and putting them together with capital and seeing success. So I wanted to do that on my own with Digital Industrialist. We are an early stage venture capital firm that's focused on this digital transition that's happening in the medical space and other spaces around the industries. Our target initially is medical and dental. I knew a lot about it. I think there's a ton of value, particularly the software and the materials side. Not only is there value, but you're doing something with great social impact. Certainly the presentations we saw this morning and some of the other ones are really the things that hopefully get us all up in the morning to do our jobs because we're doing something good for folks. So what does an early stage venture capitalist do? In the first year, this was last year I founded this, I talked to 115 different businesses that were looking for capital. Anything from 200,000 to 20 million. Various stages of life, pre-revenue, already in revenue. I looked in detail at about 38 businesses, meaning went through presentations, had meetings, looked at due diligence, and I invested in 2 firms, one in the dental software and one in the biomaterials space. I'll talk briefly about those, and then I'll talk a little bit about the trends that I see. I think yesterday in a couple of the presentations we heard about workflow. You can have great materials, you can have great printers, you can have application knowledge and design software, but if you can't bring that together through workflow, it's hard to make this easy to use. It's hard to make those applications actually come to the forefront. EasyRx is a company that's fairly unique. Nobody else is doing this. As digital dentistry gets to the practices, where the practices have practice management software and iOS scanners, intraoral scanners, they have digital printers, they've got a range of design software from folks. How do they integrate? How do they make sure that they can get that appliance done, the right appliance, the right image, by the time the person gets back in the chair? Maybe the same day, maybe the next day. This software by EasyRx is a cloud-based workflow that allows the orthodontist or dentist to put in his prescription, just like you have a prescription for your pharmacy, of how he wants to move your teeth, how he wants to create an appliance to solve your dental issue. Participated in the seed round, and they're going in for a B round next year. Been very successful, growing 25-30% a year. Very effective. And we're hooking up with great companies like 3Shape, 3D Systems, hopefully, and other companies in the world, Formlabs already. So it makes it easy for the practitioner, the clinician, to actually deliver a solution to his customer. That's really what we want to focus on. Dimension Inks, there was a lot of great discussion this morning about bioprinters and solutions. One of the things that I saw is I was with EnvisionTech and selling bioprinters all over the world, and in Japan and in Germany and in the UK and in the US. great pieces of kit, but the materials side really needed to take a step up. And Dimension Inks is a spin-out from Northwestern University, and I had seen Dr. Shaw and Dr. Jacobs publish over the last 5 or 10 years. They've done great work, but they needed to commercialize. So we actually last year funded the business to come out of Northwestern University. We've got 6 or 8 patents, and we're moving forward to a Series A round, working with many of the bioprinting companies you talked to or heard from this morning who are going to incorporate the material in for research purposes, but also working with major medtech companies who are developing the next generation of implants or other surgical aspects of appliances. We've heard a little bit about the run-up. I call it a roller coaster. It's kind of had one peak. That peak was right around the end of 2013, early 2014. That's 3D Systems and Stratasys stock, as well as the S&P 500. Interesting time. People thought the world was going to continue forever and grow. Well, it didn't. There was a hype cycle. The Gartner hype cycle talks all about this. And there's been some mini cycles since then. You know, I lived through the Y2K bubble as well. We were providing semiconductors to everybody that said they needed triple redundancy, et cetera, and there was a peak in 2000. I lived through that. And actually, the NASDAQ passed that peak last year. It's a recovery period. We have, certainly 14 and 15 were difficult years, 16, 17 better years. It's a steady climb. We're now in people who are, as in the medtech space, it's probably early adopters, but in some of the other industrial space, moving from the prototype world into the production world, and we're seeing that opportunity. That said, as I said, I've been in digital print, and whether you're 2D or digital print, 3D digital print, there's a lot of similarities. The business models of the companies are many times the same. They've got to deliver a solution, a precision equipment, materials, software, workflow, et cetera. Citibank does a great job of talking about the multiples in the industry. And my only point is that the 3D space still, compared to the 2D digital space, which includes Fuji and Xerox and HP and Ricoh, 3D is still 2x that multiple, and there's some people that have far off higher multiples than that. These are the public markets. What about the private markets? Every day you turn around, there's another Kickstarter out there. That's let's call it the first phase of funding. But there's companies that have made it big. The unicorns are companies that have gotten billion-dollar valuations pre-public market. They usually talk about huge potentials. 10 times lower cost, 10 times faster, 10 times something. Sometimes people say 100 times. I certainly hope that these guys live close to these expectations. They're not easy once you announce them to achieve, but there's a lot of smart people working in these companies to make that happen. Carbon, I know we have some folks in the audience from there. An amazing presentation, and it's not just about the build speed. I'm really impressed with the material science that comes with that platform. Desktop metal, not really in the medical space, but actually approaching metal printing different. Does everyone need 99.9% density? I'm not sure. Maybe in regulated industries, but in non-regulated industries, desktop metal is certainly disrupting that. When I either am investing or are talking to other VCs about co-investing or trying to get additional funding for the companies, what's the plus, what's the positives, what's the neutrals, and what's the negatives as it relates to this audience in this space? People love software. It's so scalable, and the margins are massive. Obviously, great space. Biopharma has been positive, and services in healthcare industries also see a lot of investment, continue to see big investment. Neutral side, I'd say med devices is not really in favor. You've got to prove that you have a clear path to a 510K. If you use the words PMA, the binders are shut, people walk out of the conference rooms almost. It's really a challenge, but that's the reality we're living with. Dental is a space which is a proven, Align Technology, largest 3D printer company in the world, as far as a usage basis. There's a lot of applications continuing to come out in dental. Rick's going to talk about that later and did a great job in the dental materials, which is the basis for new applications within dental. Negative, again, don't say PMA. If you say Class 3, it's a non-starter in this space. So I just wanted to share those perspectives and happy to answer any questions as we get to that round.
Thank you, John. So now, question and answer.
I mean, the panelists mentioned that there's been negative publicity around the 3D industry, as you've seen with the Barron's cover article. Recently, I think Charles Munger mentioned he thinks the VC industry is in a bubble. And you see that across a lot of cities. So my question to you is, do you think this industry needs funding from the VC industry, or do you think that already established players, you see a lot of healthcare companies with a lot of cash on hand. Do you think the innovation can grow organically at these institutions?
I'd say you had a comment on the VC industry macro, and then we talked a little bit about the medtech space, medtech dental space. VC industry macro, it's hard to say. Certainly the economy feels quite good. The stock market's at an all-time high. Technology is changing the world, and there's a lot of leverage, particularly in software, and that's where most VC funds, if you get down to it, are focused on these software, crowd sharing, all those things are really happening. Bitcoin obviously is getting a little bit of funding right now.
I agree.
So macro, I don't know if I'm the expert enough to comment, but I'd say it still feels like there's some room for it to grow. This segment, I would say, can the large healthcare companies fund this? I would tell you the large healthcare companies are very, very conservative for a range of reasons. And I understand there's institutional factors that limit them from maybe being as assertive or as responsive as one might expect. They have tried to respond to that by setting up their own VCs. So, and I've talked to many of the corporate VCs for J&J and Merck and, et cetera, et cetera. They are less slow, but they're also conservative compared to the real VC. So there is a middle ground of opportunity for mid-sized VC, people that aren't focusing on finding the next Uber, and not so handcuffed by regulatory, insurance, and other liability concerns, that I think there's an opportunity. This space, 3D printing and healthcare, has so many brain cells going at it. So many smart people around the world are inventing stuff. People talk to me at this conference about, I've just patented this, or I'm looking at that. Those are the people that need the help. Maybe they can bootstrap it. Maybe they'll find a mid-sized VC, but I think that's really the sweet spot that I'm trying to focus on.
So are there any pure plays in the medical and dental space for investing?
I think Materialize is very close, for sure. They do a lot of other things too. They have a service bureau, so I wouldn't say it's 100% pure play. Clearly, we've talked about Invisalign. Serona Dental used to be a pure play, but they got bought out by Dentsply, so that's no longer a pure play. Really, that's about it, John. You're talking about, a lot of larger companies like your Strykers and your Zimmers that certainly are far from pure plays in the medical. As far as publicly traded companies right now, that's about all you're looking at.
So since there aren't really too many pure plays in this space, what are the areas where you see the largest potential gains moving forward in the 3D printing space?
One of the reasons that our fund has performed so well compared to that index number that I put up there is our focus on metal and industrial printing, and that's really where we've been. The biggest problem today that a lot of people have investing is they use resource Google. And when you're investing, Google is not a resource. If you Google 3D printing stocks, time after time after time after time, you're going to see the 3D systems and the Stratasys and the X1s and the Organovos that are down from their highs, 70, 80%. And it really takes a lot more to drill down into some of the companies that have done well, like your Renishaws, your SLM Solutions, your Materialize, and things like that. So software and services, John mentioned just a few minutes ago, that's been a big area where we've had some mergers and acquisitions, actually. We've had two relatively recently in that space at 40-some% premiums. So that's an area, software and services, a high margin area, like you mentioned, that I think will be a lot of opportunity there. And then clearly aerospace is going to be a driving force going forward. A company like Arconic, which makes the materials that go into a lot of the planes and the powders, the cobalts and the titaniums. So I'll let somebody else kind of address that question as well.
To the last question, Organovo is you'd say, enabled by bioprinting as well. And some stock markets around the world have some smaller companies that have gone public. Selling, for example, is public on the Swedish version of the NASDAQ, and there are other firms in Europe and Asia that are doing the same. As far as if there aren't as many career plays, how do you invest in the space maybe, or where are the opportunities? The larger companies, whether it's dental, they're trying to get in there. It's just that it's such a small part of their revenue. I mean, I had dinner on Sunday night with a great friend who's a dentist here, and we was complaining why I didn't tell him about Line Technology 2 years ago, because that stock continues to go, despite the IP questions that are there. I think it's hard in the U.S. to get to a public market situation. You need to be $50 million and growing at 25% a year top line and have some potential at earnings at some point in the future in this space. So I don't see a ton of those happening. There will be large strategics continuing to buy niche companies that do well, whether those are in software, and we've seen some of that. MedTech as well, I think that's happening slowly.
Why did we have this steep decline in share prices in this space?
I'll start there because I was right in the middle of it. We started our fund in July of 13, and we had, obviously a great half year, fantastic, followed by 2 steep years of decline. So it was somewhat of a roller coaster. And actually, it's funny that you mentioned 2 of the specific examples. You had a lot of hype, and it was centered around the State of the Union address, where Obama mentioned 3D printing. It was centered around, that gun, which was really, in the grand scheme of things, was so unbelievably minor. It was like a needle in a haystack, but obviously it got a lot of press. But then you also had, the cover of, or not the cover, but an article in Investor's Business Daily talking about a 3D printer in every home, which I still didn't believe it then. Still don't believe that'll happen. You had Parade magazine, which is an insert in a lot of the newspapers across the country, that had a girl with a prosthetic arm, and so it truly was a hype cycle very similar to the tech bubble of 98 and 99, where the expectations got out of whack with what could really happen. The growth rates were there and are still there, but the multiples, so to speak, got so out of whack with reality. I think that was a big problem. I mean, a lot of the companies back in 2000, like Pets.com, they didn't have any. They had small revenues and no profits, and I think that was part of what happened. You still, a lot of these companies still today aren't profitable, especially some of the pure plays. So I think that was a lot of it.
I think that, it obviously was a hype cycle, but I think there were a lot of people in the industry who knew it was a hype cycle at the time, but the press did a very good job on covering that up. So, for instance, when I talked to the gun, I'm kind of interested in guns and handguns, and when I talked to them, I said, well, how much would this cost? And they said, $12,000 if we produced a gun fully, all the parts. Actually, you can produce gun parts with 3D, but just certain parts. But this would be $12,000, and not many $12,000 handguns around. So it didn't make any real sense. It was a way of getting publicity, and they said that quite openly.
Good afternoon. Tim Ryan from Henry Schein Dental, Henry Schein Veterinary, and Henry Schein Medical as well. Would it be fair to say that, as I listened yesterday and today, and I go back to comments from the Mayo Clinic, that there seems to be a lack of understanding on the commercial side of our businesses of what 3D offers? You can't push a solution to the market. The market's got to bring that in terms of requirements. From a Henry Schein perspective, we see huge application in 3D printing. We have, I suppose, for us and other companies, it's the nervousness side of it. We don't really understand it enough, and there's too many things to it. So is the future really merging of a 3D business with that commercial entity that really brings a solution at the end of the day, rather than an individual company sitting by themselves trying to commercialize their opportunities?
I think that as the tools get better, the scanners, the printers, the materials, the software, et cetera, there will be somebody who brings together that application, and it's complicated to do, and maybe it'll be the next big thing, the killer app, that will make it commercially viable and bring it out. There's been a lot of discussion about insoles over the last day or two, but actually, I don't know, none of my kids have them. I don't know, it hasn't. Somebody is going to get there on a lot of these high-value solutions that are there, because I think the tools are getting simpler, and getting more cost effective. It's a learning curve thing. The same thing happened in semicon, same thing that happened in cell phone, et cetera. So it's going to happen. I think you need people now to bring them together and put the right commercial spin, bring them to the right market, and make enough noise from a PR standpoint that it gets traction. Companies like yours in the dental space certainly will profit greatly as you enable customers to do better things for their patients, and you guys utilize the tools. But you'll probably do things that you've already done a different way and apply 3D. The question is, who's going to do the new stuff? There's probably some young buck in this room that might do that, or kid of somebody in this room that's going to make it happen, or a student at CMU or something like that.
Let's thank the speakers and thank the audience for the questions.